Let's take a closer look at Apple. And some people might be thinking about selling it after this little bit of a pop after earnings. Jeff, you ready to go through earnings?
Let's do it.
All right, before we do, just a reminder, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. Go to fool.com/The Smattering. The Motley Fool is going to give you its 10 best stocks to buy right now. Please check that link out after watching this video. All right, Jeff, I'm going to ask you to kick it off here and go through what's going on with Apple. It's a company that you own, I believe, and you follow it pretty closely. What happened in the quarter?
Yeah, so let's just start at the top of the income statement. So revenue was only up a little under 1%, 0.7% year over year. And that's notable because it's the fourth consecutive quarter that year over year revenue growth has decelerated. So whereas you're seeing this in a lot of companies lately, I think it's a sign that consumers are maybe starting to tighten their belt a little bit. But what's interesting is the bottom line continued to do really well. The earnings per share came in at $1.46, and that was up 13% over the year ago quarter. They generated another $19 billion in free cash flow, which is par for the course for Apple. They are a cash generating machine. And when you dig in a little bit deeper, I know we're going to talk about this more in detail, but they do a nice job on their income statement of breaking out revenue by geography, but also revenue by type of product. And just to go over some of those really quickly. So the iPhone revenue was up 3%, but the Mac revenue was down 34%. iPad was down 10%. Wearables and home and accessories, that was down 3%. But I think the most important one here, we've talked about this on previous videos, services revenue was up 16%, by far the fastest growing segment. And it is now 25% of overall revenue. And that's really important. And that's why, despite the slowing revenue growth, we saw gross margin improve from 42.3% to 45.2%. So those are just some headline numbers, and we can dive in a little deeper.
Yeah, I think that's a couple things you hit on there that's pretty good, is how important that services revenue is, not just to the top line growth, helping to offset, particularly like the Mac business has really fallen off. And also the services revenue tends to be recurring, right? A lot of it's subscription driven. So it gets paid every month or every year, depending on what the cut that Apple's taking of somebody else's service or other services that Apple's selling directly, Apple TV Plus, Apple Fitness, all the different things that they sell. It's recurring, right? So it's not as cyclical as the other ones. It's super high margin, right? Like you said, the gross margin pushed over 2% for the business.
Right. It's all recurring subscription revenue. So yeah, I'm assuming that is the reason that you saw the gross margin jump so much.
Yeah, absolutely. It is. One thing I want to mention that I think is important, I'm going to bring it up on the screen and highlight it again in the category sales. You mentioned iPhone revenue. And I thought this was an interesting one because you and I were talking a little bit about this before we hit record, and it was up slightly. And my initial reaction was, wow, that should be up a lot more. We've got a new iPhone out. The iPhone 15 came out. And you pointed out that it was only out for a couple weeks in the quarter. The quarter ended September 30th. iPhone came out mid-September. So maybe some positives there. But we do know, Jeff, that the reports broadly are that the iPhone 15 isn't necessarily selling all of that great. But it's still really, I think the main thing is that it's a little bit early to say what is the impact of the iPhone 15 going to be, because we'll see that the next quarter, right?
Yeah, typically it's the quarter ending in December where you see the big bump up in total revenue because of the iPhone refresh cycle. It's interesting. So that's by far their biggest revenue driver. That the iPhone alone this last quarter was $43 billion. And that was by far the biggest segment. But next is services at 22. And then the iMac, the iPad, and all the accessories and wearables and stuff are smaller proportions of overall revenue compared to those two kind of big buckets. So I tend to focus on those two things each quarter. What's the iPhone revenue doing? What is the services revenue doing? Yeah, we'll get a better idea in the next quarter. But I also think that the services is just going to become more and more important, because I wonder how much more crazy innovation Apple can really get out of the iPhone. It seems like the last several upgrades have been just the normal better battery life, nicer camera, not the transformative iterations we saw maybe earlier when the device was newer. So just anecdotally, product-wise, I think that's something worth keeping an eye on as well.
Jeff, there's one more thing I want to highlight here that I think is important. And sometimes it gets overlooked for those of us that love talking about the technology, love talking about the innovative, talking about the power with consumers. As much as this is a tech company, it's the most powerful consumer brand on earth as well, right? And there's that cachet of carrying the Apple product. once you're in the ecosystem, it's really hard to get out because you have so many things that are already there and that it works. That apps that you already have, shifting to an Android is not super easy. The products just work. They're super reliable. The integration between your handheld devices and your PC, if you have a Mac PC, all of those things are so user friendly. So all of that appeal is there too. But sometimes it's easy to forget that one of the ways that, especially under Tim Cook, that the company has created value for shareholders is returning capital back to investors. And a big one has been that aggressive share repurchase plan. So if you look, I've highlighted it here, but I'm going to go back and just make sure everybody knows. So this is the year over year period, September 2024 through the end of the most recent quarter. We're looking at a substantial reduction in shares outstanding that continue. But every time Apple buys a stock back, they buy another share. It makes your portion of the pie a little bit bigger, right? You own a little bit larger portion of the business. And that's a really valuable way that even as revenue growth has slowed, earnings growth has been good, but it's still has slowed a little bit. You can create more earnings per share value by repurchasing those shares.
Yeah, at some point I believe we're going to get to a point where, crazy growth out of Apple is likely to be, we're not going to see that as much as we did maybe earlier in the cycle. But you're right. The share repurchases is a big bonus. There's a dividend too. The yield is modest. That's not something really you don't want to write home about that. It's not crazy good. But just as an example, over the last 5 years, they've reduced their shares outstanding by 18%. And if you go out even further, it's down 38% over the past 10 years.
If you've owned Apple stock for 10 years and you haven't sold or bought a single extra share, you own 38% more Apple by doing absolutely nothing. That's like Warren Buffett's favorite thing in the world to happen. And again, yeah, this dividend yields less than 0.4% at recent prices, but the growth of that dividend. So if you've had dividend reinvestment turned on and those share repurchases, that alone, your portion of Apple that you own has increased probably 35 or 40% without you spending a single nickel of money out of your pocket.
Yeah, if you've owned the stock for any decent length of time, this is as close to a leave it alone in your portfolio stock as I can think of, at least the way I see things right now. Like you said, dividends, reinvest them, the share buybacks, it's just going to sit in your portfolio and compound over time. The bigger question, Jason, I think that people might be wondering is, if you're not as long holding of a shareholder, or if you're considering buying or adding, how does the valuation look right now?
I think you and I both agree this is not necessarily a stock that you necessarily want to sell at this point. Maybe a little bit on what we're going to talk about on valuation, about maybe why not to buy, especially if you have substantial exposure, right? If you made a large investment at some point earlier in your life, and now Apple's a massive part of your portfolio, this may be enough reason to think about maybe selling some of it. But by and large, yeah, Jeff, I think you and I agree. It's definitely not a sell stock, but I think this right here is the thing that to me that says maybe it's not a good time to buy. Again, revenue growth is slowing. We've seen declining revenues in parts of its business. As much as the margins are getting better from the services part of the business, it's hard to say exactly how that's going to continue to scale up over time. And if you look at this number right here, this 30 times earnings, you're paying 30 times earnings for a company worth about $2.9 trillion with frankly more modest growth prospects than its ads, because it has become so large. Your percentage of growth is just harder to do. And you look back over, the past dozen years or so, and on average, it's traded for about 19 times earnings. You look over the past decade alone, it's traded for almost 20 and a half times earnings. And to me, especially if you're thinking about it as like a safe stock to buy, you're paying a massive premium multiple. I think if you're looking for safety, honestly, I think you're better off just putting it in a money market or a CD and than buying Apple at 30 times earning. What do you think, Jeff?
Yeah, I tend to agree. I would not be selling right now unless as you pointed out, it became like an oversized allocation in my portfolio, then maybe trim or something like that. I do think if you've had the stock and you own it, just hold it. It's going to be fine from that sense. It's not that long ago that we got better opportunities to buy the stock. Something that causes the market as a total to go down could provide some more compelling valuations to pick up some shares in the future.
Yeah, even at the beginning of the year, you could buy Apple at one point for close to 20 times earnings. And I think those opportunities will come again, Jeff. I agree. Investors are better to wait to look for a better pricing, a better opportunity to buy.